I hope you're doing well. And US stocks notch their biggest jump in 6 months as rate cuts bets fuel rebound. Now, you got to be cautiously optimistic, but follow the money. There's a lot going on within the Federal Reserve. And I don't understand. I mean, people are quick to jump onto the bear market narrative, but that is because they don't understand the macro. The macro drives everything we do. And if you don't follow the macro, the chances are you will be one of those people that dump their bags. And at least today, you could have had like 10, 20, 30, 40% in some coins, as I'm seeing. So it's never good to actually call tops and bottoms of these markets unless you are incredibly sure. Now, are we out of the woods yet? Absolutely not. I do believe, and I have the evidence for you as to why this is not the end of what we're seeing, but merely the beginning of the end. Okay, now that we had two key levels for Bitcoin and Ethereum to try and hold, structurally, we're still good. Now, what gives me a bit of hope is, first of all, Ethereum is doing its bit. Now, Bitcoin's not too far off, and Bitcoin does react very fast to these macro movements. So you've got to be careful, but still, ETH at $2,900 is great. And ETH really needs to get above 88,000 and hold. Now we're hovering there or thereabouts. Even 89, I don't care. 90 to 92 is my target, but this is exactly what you want from a small recovery in the markets. Now you might be wondering what's causing this. For me, the fear and greed index still continues to show that crypto has absolutely immense fear. Yesterday was the same, 10, today a little bit better, but eventually this notches up and you do get a better sentiment overall as more and more liquidity comes. But let's dissect what's really going on here. Now, it was a pretty depressing market yesterday, and then overnight, bam, we get 81% chance of a likelihood of a Fed rate cut. Now, this is pretty significant, and with 15 days to go, this is a confirmation, in my opinion, that the Fed was going to cut rates. Now, what did I tell you? I told you that the Fed is likely to pivot and probabilities for December's rate cuts will change, even if they are saying they're not going to cut. Why? Because the labor market, because of what's going on with inflation. This is the Cleveland Fed's inflation year-on-year percentage. And you could see here, October 2025, 2.7. Now, the expectation was that December was also going to come in hot. Having said that, the situation in the labor market is at a critical point. And because it's at a critical point, the Fed is not taking any chances. Now, there are two significant mandates for the Fed: inflation, and the other one is the labor market. Both of these are under pressure, but with fear and greed index just going absolutely berserk, with lack of liquidity, we have seen a small bounce. I would continue to DCA, and I would continue to stay vigilant within the market because we are definitely not guaranteed. However, I'm telling you, if you follow the money, the chances are you are going to do very well in your investment endeavors. Of course, I bring you information. I buy what I buy, but overall, and I will do other videos as well today to give you a better picture of some of the altcoins and what's going on individually. But strategy 74433 is the magical number. This was my number of disconnection. And I can honestly say, even last cycle, the strategy average here was, again, a lot of people are scaremongering people, but the bear market of 2022 saw average price of strategy at $33,000 or 30K even. And the bear market, right? The bear market bought as a 15,685 or something like that. Okay. Michael Saylor held through this number. Okay. Even though his average was over here, right? So the chances are with a 74K average, right, MicroStrategy is likely to do the same. Like I said yesterday, the likes of NACA and other Bitcoin treasury companies will absolutely go bust if the market drops. So a lot of this is scaremongering, fear, and of course, the market is still not out of fear, but I would say this is the headline. This is what you need to do. You need to follow the money. Now, of course, this is their, again, I've always said, in my opinion, what you do in the market with good information is up to you. But this is what's happening now. After a recent sell-off, right? You got to pay attention to the language. After a recent sell-off, and of course, the other one is what? Buy the dip. Now, this is obviously an article in the Financial Times. The tech industry in particular was hit. And of course, the composites index rose by 2.7%, which is pretty decent indicator for risk assets. Now, of course, the biggest news was, and I have actually given the guys a first-hand read at this one as and when it broke, and it was last week at the depths of the fear. Now, Alphabet rose by 6.3%. Why? Because there was huge 4 million shares were bought by none other than WB. All right. For those of you who don't know, that's Warren Buffett. Warren Buffett went and bought tons of shares in Google. At the time when I reported this, nobody in the market did report that. It is an indication of the AI related stocks, in particular the AI bubble. And in addition, that is also a confidence for Google, which is right now expected to dominate the AI race. All right. So I want you to understand what's going on broadly in the market rather than looking at crypto, because tech stocks, especially AI, will actually reflect very well for crypto, in my opinion. Just like we expected the whole entire house to collapse if there was a massive bubble in the last few weeks, with the Nvidia report being placed with such importance. You've got to have faith. One of the problems in this space is influencers have no knowledge, and by and large, they are terrible. They trade in fear, and that's the commodity, right? You do this and you do that. And no, you have to make an informed decision that is allowing you to buy, even if we're in a bear market, allowing you to buy good assets. Of course, we take advantage of any dead cat bounces that may occur from here. I by no means have flipped bearish or bullish. My main job, in fact, as an investor, what I try to do is let the community know what's happening. And then we make an informed decision. We can argue about which coin's going to do well, but liquidity is finding its way. And there's never been a bear market during a liquidity expansion. There have been dips during or at the start of the process where there is liquidity expansion, but we haven't gone into an utter and total bear market like we did in 2022, like we did in 2018. Why? Because liquidity is not contracting, it's expanding. So it makes it absolutely logical for people calling tops and saying that we are going to go back to 50K or 40K or 30K, to some of the crazy stuff that I've heard. We may well end up going there, but it may not even be the bear market that we're used to. This is not even the traditional 4-year cycle that we're used to. Now, on the thumbnail of this video, you see two characters, Jerome Powell and Fed Waller, Christopher Waller, Christopher Waller could be a replacement for Jerome Powell. Now, of course, John Williams last week signaled the support for the rate cuts. Now, all I do is follow money here, guys. I don't give a shit about the day-to-day, what's going on here and there. It is absolutely the macro that is going to be key. Now, the Fed is expected to cut rates because overnight, we saw the odds jumping. The Fed meets next month, 15 days to go. Now, of course, 75% probability of a December rate cut, right? 75% of a potential December rate cut. Right now is at 81. Okay, so this year has gone up significantly, and of course it also rallied during the comments by Williams. Now, in addition to that, you're seeing the overall situation is incredibly good for the bulls. Headlines are being are benign, and policymakers say supportive things. Tariff talk has quietly abated. That is absolutely spot on. Okay, you got to think like a big investor now. And of course, we are seeing the damage that the tariffs have done. And what you're seeing here is they are saying now, of course, even Trump is aware, and this is a very good bullish thing for the market. Okay, now again, these gains came as investors' concern over the elevated evaluations of companies linked to AI took back the seat, and of course, interest rates, the new interest rate outlook, the adverse sentiment towards any tech stock has fueled a volatile sell-off in Wall Street. Of course, crypto is an extension of that. The S&P is down 2.7% from record highs. Not a lot. Bitcoin is more like 25-30% down overall. The sell-off was arguably due to the S&P's typically pulling back 3 to 5%, typically average every 2 to 3 months. Deutsche Bank analysts said that traders are positioning themselves, but that the cynics are, of course, remain in the market, and the market, the cynics say that market is expected to dip below these key levels once again. Now, if you look at this, Bitcoin rebounded, of course, 89,000, and today Bitcoin is dropping back down. That's expected. We are looking to close a daily candle above that anyway. October, it went down about 30%, 29%, 28%, whatever. And of course, latest crypto convulsions will be constituent to hyperinflation in crypto. If crypto was a currency, said Paul Devon. And that's true. UPS Global Wealth. There's a lot of tokens out there. There's crazy things happening. Analyzing Bitcoin's recent spending power collapse is equivalent to roughly 800% inflation. Moves in European stocks were also muted. Of course, we still need to see more. And this is just the start of what I consider to be the greater pivot by the Fed when it comes to liquidity. So the picture looks good, but don't sleep on anything, guys. We need to be cautiously optimistic. You're seeing pumps anything between 12% to 20%, in some cases even more. In the top 100, again, in the top 100, actually 2.9, you got Rain. CAS has absolutely rocketed and went up by 27%. Of course, you've got Sui there, but CAS is really being the main mover along with Rain in the top 100. In the top 200, we've got the likes of Monad, Searching. Of course, I'll do a dedicated video. See Grass, Fartcoin, Pendle as well. It's looking all right. It's looking much better today. Top 300, you've got the likes of Co AI, Flocks, Deepbook up slightly. Of course, OFT here. And again, if we go to the top 1 to 400 here, Waves up 37%, Esports up 11%. And of course, there's Home and a few other things over there that are looking slightly more green and bigger. Top 400, Rats, Usual, Honey, Hive Mapper even, Looking, and Aura are the biggest gainers there. I usually do top 1,000 scans, so I'll do that with you. Again, here you've got the likes of Xpin, Bless, Mira, Sapien. You've got a few coins here doing some numbers. And then, of course, USDJ, stablecoin, and then Hemi over here. This is 600 to 700. And then, of course, as we go down, the gains actually become more because you got smaller market caps, Mobile, Ford, IXX, IXS, Apu, L3, Chill Guy, all moving up very aggressively on the back of this, because crypto is absolutely undervalued. And the later you go here, the more you see the big bubbles. Yalla, GP, and Noise doing quite nicely as well. Alf there with a 7% gain. Okay, and then if we go to the 900 to 1,000, we have the likes of Ping, Bobo doing up 26%. So overall, you can see Carrot and Neural AI here in 900 to 1,000. Some really good bargains to look at in crypto. Absolutely insane. But CAS is obviously the biggest mover in the top 100. Okay. Finally, guys, I'm going to show you something here which we need to kind of consider, and that is always going to be, I'll get my chart up here. So December rate cuts in doubt. This was the headline. This is what we've just explained and passed over. We talked about the CPI. We talked about the rate cuts and the odds shooting up to 80%. And of course, one of the most important charts, if I can find it here, is the chart of the Fed's TGA account. Now, I'm going to be very honest, okay? What we have here is every time it comes to this level, every time it comes up here to these levels, guess what happens? It reverses. It reverses. It reverses from here. It's dropped there and it's dropped even more. This was like summer, April low, spring. And now what we're starting to see here, I need this. It is a lagging chart, but I need this to drop. The moment that drops, what you will see is Bitcoin price go absolutely to the moon. So don't count your chickens yet, or even your eggs yet. Wait for this chart to absolutely reverse, and that will be a massive confirmation. And I would put every single penny I have into the market. Until then, I will remain cautious with the bags that I have. Again, Kaspa moving massively today. It was down, so it wasn't going to go to 1 cent. But at the end of the day, we have more to look at. Follow the money, okay, and not the fucking influencers. Because if they obviously knew what they were talking about, one day they talk about M2, right? Everybody talks about M2, not for the beneficial of the community, but it is cool to talk about these concepts. The next day they will talk about the 50 week. Oh, it's a bear market. Why? Because Ben Cowan, who's a nuclear scientist, has said this is exactly how it happens. But is this cycle to you? I mean, I'm talking to you as an investor. Does it look like it's the same cycle as it was last time round? We have institutions, okay? We have a crypto-friendly president, okay? We have a federal chair replacement, okay? So the Fed chair, okay, is going to be replaced by somebody who is probably dovish, okay? Somebody who's dovish, okay? We have the liquidity expansion, or the LE, which means we have QE, QT ending, right? QT ending, and we are pivoting to quantitative easing, okay? That means they are going to print money. And if they print money, then they need to stash that money somewhere, and usually goes to the market. So this is liquidity drain, 2022, bear market, okay? Liquidity expansion, early 2020, mid 2023, we recovered, ETFs, 2025, elections, liquidity expansion here. We take off again in July, new all-time highs. That was December here. This drop was in December, and this was in July to do the all-time high. I hope you can understand what I'm saying to you. Greatness only comes in these markets once you absolutely lock in. Like I've made mistakes. I've got projects that are down, but I don't care. I'm looking at big money now. I'm looking at things to get better. And of course, if they do get worse, we already have levels where I need to exit the market. One of those levels is this particular wonderful number of strategy. Until then, I'll see you on the Monad video, Sui video coming up. That's going to be very exciting. Smash a like, guys. Share the content. This content is highly valuable. And of course, big up to Kaz for, my portfolio is happy today. Let's just put it that way. God bless you all. Stay safe.